Hey traders, in today's video, I'm going to show you a powerful trendline trading strategy that most people overlook, but once you master it, you'll be able to spot high probability trade setups with ease. Here's a quick look at what you'll discover in today's lesson: how to draw trend lines correctly, how to trade using trend lines, how to use factors of confluence to find high probability trades, the trendline bounce strategy, the trendline breakout strategy, multiple time frame analysis, real chart examples. By the end of this video, you'll have a complete trendline trading strategy. Leave a comment below and tell me what topics you want me to cover next. I always check the comments for new ideas. Let's get started. One of the most common questions I get is, how do I draw and trade with trend lines the right way? So let's break it down step by step. A trend line is simply a line we draw on our charts to connect swing highs and swing lows during a trending market. Let's start with a downtrend. Price moves in waves. We get a run, then a pullback, followed by another run. The lowest point before a pullback begins is called a swing low. The highest point before the next run starts is a swing high. In a strong downtrend, price keeps making lower highs and lower lows. To draw a trend line in a downtrend, we connect the swing highs along the top of the price action. This trend line acts as a dynamic resistance level. Now, let's look at an uptrend. Again, we have price moving in waves, a run, then a pullback, followed by another run, another pullback, followed by another run. The highest point before a pullback starts is a swing high. The lowest point before the next run begins is a swing low. In a strong uptrend, price continues to make higher highs and higher lows. To draw a trend line in an uptrend, we connect the swing lows along the bottom. This trend line acts as a dynamic support level. Now, keep in mind, real market conditions aren't always this perfect. Price doesn't move in a straight line, but this basic structure helps us understand the market flow. So why do we even draw trend lines? In fact, there are two key reasons. First, trend lines act as support and resistance. In an uptrend, the trend line acts as support. When price touches it, it often bounces back up. In a downtrend, the trend line acts as resistance. When price touches it, it often rejects downward. But never enter a trade just because price touches a trend line. Always wait for confirmation, which I'll explain later in this video. The second reason we use trend lines is that trendline breaks can signal trend reversals. In a downtrend, we place our trend line above price. If price breaks above this trend line, it could be an early signal of a reversal to an uptrend. In an uptrend, we place our trend line below price. If price breaks below the trend line, it could indicate a potential trend change to a downtrend. However, this is not a guaranteed rule. Just because price breaks a trend line doesn't mean the trend has reversed. You need additional confirmations, which we'll cover in the next section. Now that you understand what trend lines are and why we use them, let's dive into how to draw them correctly to improve your market analysis. Before we start drawing trend lines, here are a few key principles you need to follow. A minimum of 2 touches is required to draw a valid trend line. The more touches, the stronger the trend line. But remember, more touches don't guarantee that the trend line will hold the next time price reaches it. Trends are rarely smooth and perfect. Markets are choppy, messy, and unpredictable. Don't expect price to respect a trend line perfectly every time. As you can see, the price broke below the trend line but then closed above it. Here, the price did not respect the trend line and broke through it. Treat trend lines as zones, not exact lines. Think of trend lines as guidance tools rather than rigid, precise levels. Price will not always respect the trend line religiously. As you can see here, the market retraced and bounced up before even touching the trend line. The same thing happened here. It bounced up before reaching the trend line. This shows that trend lines are not precise levels and the market will not always respect them perfectly. However, as a trader, you should draw the trend line and remain disciplined. As you can see here, this time the market provided us with a great opportunity. Price retraced, retested the trend line, got rejected, and then moved upwards. Don't force trend lines. If a trend line is obvious and helps your analysis, draw it. However, if price action is unclear and there's no logical trend line to place, it's best to leave it out. As you can see here, the way we initially drew the trend line is incorrect because we tried to force it, ignoring this touch, which is a mistake. Here we are attempting to force a trend line where it doesn't naturally fit. The correct approach is to draw the trend line properly, following the actual price structure, and then wait to see how the market reacts. One of the most common questions traders ask is, do I draw my trend line through the wicks, the candle bodies, or both? Here's the answer. Always draw your trend line where you can get the most touches. Let's break it down with an example. Here's a clear downtrend. If we draw the trend line to align with the most swing points, you'll notice it touches both wicks and candle bodies. At some points, it aligns perfectly with wick ends. At other points, it cuts through a wick and touches a candle body to maintain consistency. The key takeaway? Your trend line should hit as many key points as possible.